Today we are here to discuss a very focused topic of discussion, that is supply chain finance. It is a relatively new field in the financial services, and it appears to be a field that has a lot of promise given the fact that the trade is expanding all over the place. Thanks to internet, thanks to connectivity, thanks to modern technologies, business has become so much easier. And obviously, and we are seeing so many unicorns all over the place. I think every day there's some news about some unicorn or other. And so we really know that we are in a situation, in an economic situation, where we are not just looking at 2-3% growth, but maybe 20-30% growth, maybe even more. And very clearly, economic growth and financial sector growth go hand in hand. So supply chain finance is projected to play an important role in this economic growth. We have a chief guest here today, Mr. Kishore Pradhan. I will call him on the stage shortly. And we have a partner, we have a knowledge partner, Themepro. Themepro is a fintech. We'll come to know more about this company during the course of the day. But these are the kind of people who are bringing fresh thinking into the needs of the industry. May I now invite Mr. Kishore Pradhan, our chief guest for the day. Kishore, please come up. And while he's coming, maybe you can show your appreciation. Kishore will speak with us briefly 10-15 minutes. He's got a wealth of experience in this industry, as I learned before I met him, and even as I learned when I was speaking with him today. And Kishore, do share with us some insights you have about supply chain finance in the Indian scenario and in the global scenario.
Most of you know me. He has given a good introduction. Basically, I'm an ex-banker. I always introduce myself as an ex-banker. So let me start with a very simple and offbeat kind of a case study. Okay. I'm supposed to talk about the supply chain. I'm supposed to talk about the technology in the supply chain. So this is something which combination of both. So a simple kind of an incidence, which helped me to rethink the entire supply chain strategy of the banking industry. I was with my daughter and I took her to one of the joints. It was supposed to be the dosa joint. They were actually giving the lots of dosa. There are something like 30-40 types of dosas. It was having some fabulous pictures on the menu card. So my daughter was very small at that time. It is the incidence of something like 7-8 years back. She was a kid, and she was really excited about it. Now, for me and my wife, when we selected dosa, it was a very simple choice. Whatever I can understand, I order. So we went there and we ordered some simple dosa. But my daughter ordered some extraordinary, some big name and some great kind of a picture on that menu card. So we ordered, waiter took the order, and then he came back after 5 minutes. And he told me that whatever the order my daughter has given cannot be served. Fair enough. It is a new joint, there are 30-40 types of dosas. So I just asked him, what happened? Your chef is not there? No, chef is there. So material is not there. No, material is also there. So the chef doesn't know how to cook there. No, it is his choice only. So we can do it. Then what is the problem? No, sir, it is not fitted into the system. It is a new software. So that entry, because if you go to the hotel software, they will not put everything in there. It is numbered. So like for number 1 is for masala dosa, number 2 is for idli sambar, and all this stuff. So I asked him, what is the problem? No, number is not fitted in this particular software. No problem. What you can do is, whatever is the number fitted in the software, you can do that. But first I was actually impressed. Because if you really look at it from the software perspective, big hotels has this kind of an arrangement that you put an order, the order will be passed on to the back end, they will prepare it, they will pick up some material like potatoes, onions and all those things. It will also get recorded in the system, and then they will actually have that stock statement, and they have that ABC analysis and all those things to order the new material. So it is a standard process in like 5-star hotels and 7-star. Everything is well connected. You pick up some material, the stock of that material will go down. Once it goes down below minimum quantity, the new order will be generated and given to the suppliers of that potato, onions and vegetable vendors. So I was highly impressed. For this kind of an entity, for this dosa unit, so I asked him, is this a kind of a software? So I explained to him, is this the kind of a reason why you are saying? Because if you actually do not use that, some material will be used and there will be some kind of a mess at the back end. So no sir, हमारे इधर ऐसा कुछ नहीं है. Then what is the problem? उन्होंने सब number नहीं है. Okay, I told him, okay, let's do one thing. Don't give me this dosa. You prepare this dosa, but whatever is the amount of that dosa, find out which number is available with the same amount. So I will pay you the same amount and you give me the dosa. So it is not. He simply refused. Why? No sir, हम लोग नहीं कर सकते. We can't do that. Well, let's do one thing. You don't give me the bill. You prepare the dosa and I will give the cash. He refused again. Now what is the reason? No sir, this is not some kind of a policy. Our software doesn't allow to take the cash for which bill has not been raised. Now this was the typical example of any financial institution and a technology company. That's the problem. That is where the difference is. What I need is everything is there. That's the bigger challenge. And Hari sir is there, he's a very senior guy. And we keep discussing about this. See, this is the challenge for the software company. Can we prepare it? We can certainly prepare it. Is it what client is required to do? It's supposed to be done. But we can't do it. Are we not offering what client wants? The material for dosa was there. The chef who was preparing it was there. Everything was there. What was the problem is the software system. And if you really look at it, that for any institute, whether it is a SCF company, NBFC, banks and all those things, we have come across the similar kind of a requirement. Everything is there. What you need is some kind of an customization. So when we actually talk to the software companies, Hari sir, correct me if I am wrong. You can actually correct me. You ask for some customization and they will come out with a change request. The change request will be supported by some kind of a document. That is a BRD, FSD and everything. Then it will get signed off. There will be cost and it will be a 6 months project. Correct. What I was trying to, I actually deal with a lot of fintech companies and software companies. I have been working on the trade and SCF. So I told him, why don't you prepare something that any customer, whether it is a bank, whether it is a NBFC, should not come to you for the change request. It is the market. See, typically I always keep telling the bankers, we are not from the core industry. Core industry is the manufacturing industry. Banking and financial services is the service industry. We are alive because manufacturing industry is alive. If we can't serve them, then it is a question of our existence, not that manufacturing company. If you need some kind of a program, if you need some kind of a software, some kind of a financing, that is our requirement to give them that particular financing. There will be few changes. But for every such changes, if you need to change the software, then it becomes a challenging requirement. So we need to really look at some kind of a solution which will help client to prepare their own product. In a simple fashion, if there is any kind of a supply chain product, we are talking about supply chain. So vendor financing, dealer financing, somewhere interest is paid by the vendor, somewhere interest is paid by the dealer, somewhere part interest is paid by the vendor, part interest is paid. It may be there, may not be there. But can we give some kind of an leeway to the client to prepare their own program?
So thanks for opening the mind to new ways of looking at technology and software. And in line with what you have suggested, I think it would be appropriate at this time for me to invite Mr. Hari Padmanabhan, the chairman of Themepro Technologies, an IT industry veteran for sure. Thank you, Hari, for joining us.
Good evening, everybody, and a warm welcome to this evening. And thank you, Kishore, for setting the stage and hitting the nail on the head right at the first moment. Yeah, you really said it all. And you talked about everything I want to say today. Talk about comes from what I've done over the last 42 years. I was counting before coming up. So I built my first product in 86, 87, and today I'm building a product again. So that's what I enjoy doing. So fundamentally, I think. But what's changed? What's changed? In those days, I would never imagine standing up in front of a gathering like this without a jacket and a tie. And today I'm not even wearing a jacket. Things have lightened down a lot in the spirit of time. And I think, so if I look back in these so many years, if there is something that I can learn from that, is fundamentally what I should unlearn. So one of the things I keep telling my team all the time is our fundamental ethos, our fundamental job is to really to rethink, recreate, redeploy anything and everything we do practically every day. That's the basis on which we run Themepro, and that's what we want to talk about and bring to you today. So I think Kishore made very, very clear some of the major pain points that many of you have faced. And in my journey over these last 40 plus years, and with many of the team that are still with me, who've been with me last maybe 10, 15 years, we've seen through all of this. And when we built the product here in Themepro and we started off, the fundamental driver of this was to say, how do we really look at what's happening around us and how do we bring that into what we do? Unfortunately, I did a startup 10 years ago, purely B2C, in a completely different space. And you realize whether you look at what I call the mamas today or the fangs of yesterday, or the most valuable companies in the world, fundamentally who's driving those world-beating products, who's driving this massive amount of value creation that's happening in these very few, very, very large tech companies, it's really not the techie sitting in the back. It's actually the customer who's using that. This little piece of real estate that you hold in your hand, it's the most valuable piece of real estate. If you add up all those multi-billion dollars that have created value in their hands, this is what's creating the value. And so when you actually experience it, you realize that every transaction a customer does, every time, whether it's a 10, 12-year-old kid who today carries a mobile phone or a 70-year-old, 80-year-old person who orders that Swiggy and that ad that you see when you watch cricket, when they fight about what to order next year, touching the surface with the phone with a finger, that's where the data comes from in terms of figuring out who's doing what are they struggling to do, what are they not able to do better, and how do I release the next version that much faster. 21-day sprints. When we started off, we had waterfall methodologies where a team used to get into a room and cuddle and huddle for whatever time, till they really come out with a specification first. Right? Today, from the time you get that customer feedback, within 21 days, if you not put it in your product and got it out of the marketplace, somebody else has done it for you. That's what's changed. What else has changed? We had any software, whenever you looked at a product company, when we looked at delivering a product, the first question was, what is the technology we should use? How much does it cost upfront? How much does it cost upfront to the customer? So there was everything was proprietary, everything was controlled by a few people. You had to make your calls, your choices, and it meant cash, upfront, putting out cash. Today, somewhere between 2008, June, July is when both Play Store and Apple App Store came out in the marketplace. And September, October 2009, around that time, the billionth download happened from the App Store. Billion in the week. So, and what's the kind of investment that people put on it? A 14, 15-year-old kid sitting in an attic, uploaded an app within 15 days of the App Store being put out there, and even before that, the SDK was available in the marketplace. And that kid made about $15,000-$20,000 within a few days. It was big news at that time. So the most important thing when we build, talking about change requests, is the business variance that happen in your business. We've looked at that based on our engagement over the past many years in the marketplace. That's been built in. Most importantly, the fundamental design is such that when you ask for a change, literally, and I'm not making a sales pitch here for the product. So once you've set up and gotten going in day 60, 6 months later, you want to launch a new product, you make the decision in the company to launch the product today. Tomorrow your product can be live in the marketplace. Literally.
Thank you, Hari. Now we'll move on to our next session. Our next session is going to be an unconference. You're going to have people sit around a table, 5, 6, 7 people. I'd like to divide all the participants here kind of equally around. So I'm going to give you so this unconference exercise has 2 parts. One is you're going to collectively put together some information on a piece of paper. And then secondly, you will collectively analyze that information to find some interesting insights, patterns, something that will create value. Then I will invite a couple of you from each table to come up on the dais and share with the entire team what has been the findings, what has been the discussion on your table. May I now request members from team 1 and second team, one representative, or if you have 2 representatives to come up on the dais. We also request Kishore and Hari to join us.
Hello everybody, I'm Asim Bhardwaj from SP Finance.
Yeah, hi, I am Vineet Rangula from Yes Bank.
I'm Nirmal Patel from Bank of Baroda.
So we'll start with the upgrade existing application and existing market. Where the team has pointed out. Yeah.
You just describe the 4 quadrants.
Okay, they're all different for everyone?
Yes, each table has a different set of quadrants.
So we are looking at customer focused dilemmas. There are 4 quadrants: upgrade existing application and existing market. That is one quadrant. Upgrade existing application, new market. That is another quadrant. Introduce new application, existing market. Quadrant number 3. Quadrant number 4, introduce new application, new markets. Yeah. So I'll quickly run past all the 4. The first one being upgrade existing application, existing market. Existing market, the team has understood that maybe incremental changes like KYC, maybe driven by regulatory changes, and regulatory changes are often we see that they are also incremental. With time, the regulators, RBI, they keep coming up with new which should stand the test of time, and existing platforms, core banking or standalone platforms, should continuously keep on upgrading themselves to keep up with these regulatory changes. So that's what it means in a nutshell. The other second point which we thought about it, core banking upgrade. Again, we see that core banking applications, some of them do not have very supple, nimble, or evolved. If I have to, today is the flavor of the evening is supply chain finance. They don't have very evolved supply chain platform. So while they are co-banking, ideally they should be having, but the fact of the matter is a lot of it is missing. Hence the need for specialized supply chain tech firms who are offering supply chain platforms or finance IT solutions for that matter.
Thank you.
Yeah, that is one. So that this also comes from a real-time experience, and great role being played by these niche supply chain finance tech partners. One of them being Themepro, and then the other third point in this quadrant, upgrade existing application to an existing market is, there's a continuous journey or effort to digitize the journey. One would argue no, everything is digitized. The fact of the matter is sadly so no, because we always believe that there's something else can be digitized, in the customer experience. So that is one thing which again is work in progress for all platforms for that matter, right? So this is one. This takes care of the existing, market, upgrade existing application. Now I move to quickly move to the second quadrant, that is upgrade existing application to new markets. One of the things which we believe that which came out in the team was, Ajita came up with this thing. It was insurance wrap, in factory. So again, this is one product which is being discussed very recently, not very long ago, at least in the Indian context. How do we, wrap up an insurance, by insurance, ensuring the, the receivable buyout and stuff like that. So I think a lot of talk is already going on. I'm not sure it is still converted or industry started applying that, but that definitely that is in the go. And obviously once that is in place, our tech partners will quickly lap up on that opportunity and start working something on around that also. That is one part, means upgrade existing application which is there, let's say standard supply chain finance, but build this utility, bake it into with the help of this feature, for feature for that matter. Then another thing which was upgrade existing application, new market can be actually it's no more new. It's e-commerce, but the nature of e-commerce market made us mention it here, that e-commerce is coming up with new tech firms, startups in various sectors and various product lines, and that itself is a lot of challenge for banks and finance companies to continuously keep up the pace and come up with structures, how to address a buy and sell with a very unique feature of e-commerce. So this is one. Then we move to the third quadrant.
Let's move a little faster.
Yeah, existing markets introduce new application. New application again. These are no more new. One is dynamic discounting. Existing markets we can introduce to by adding the in-app application and again marketplace. Again, I'm not talking about marketplace. It's the trades and exchanges. I'm talking about other than that. Then introduce new application to new markets. We can look at deep tier is another for tier 2 financials. Vendors or dealers. Is there any structure? Maybe not. I think people are moving towards that. Yeah. Thank you.
Interesting. Thank you so much.
Yeah, so.
Can we have a round of applause? I think very important.
So our topic is data related dilemmas. Now under this obviously we discuss about the 4 quadrants. So we'll take one quadrant, we'll together give our views, basically team views. So first quadrant is upgradation of the existing application with the old data. Now we have there are transaction and second is the credit processing. These are the two basic things which we discussed upon, where we have anchor ledger, and it will help us to analyze the transactions of the dealer, say, and based on which we would understand its capability of indenting or invoicing. However, based on the transaction, existing transaction, we understand that what kind of utilization he is doing. So now these kind of analysis, we would require a new system which is right now also available in the market, and also the audited financial statements and bank statements which are also available presently. But there are many fintech companies who are providing this analysis based on the old data, so that we can look at it. Second is the new data and upgrading the existing applications. Now this is little bit difficult. What we got it, because right now we see that the GST analysis is quite available in the market, which is difficult to incorporate into the existing system, because it's a new data, and there are multiple data available from the various APIs from the government portals, as well as from various bureaus, regulatory bureaus, and all those aspects. So these data are available, but upgrading of the existing applications would be a challenge for the existing banks or the financial institutions. Second is the return sales leading to debit notes. Now there are in the vendor side, vendor financing side, if the returns are happening on a frequent basis. So if that kind of analysis is available, it would give us the history of the the vendors, that how they are performing in the market, and what would be the number of debit notes which are coming up into the system. So that kind of data would help us to do this.
So if you talk about the old data, and which could be only harnessed using a new application, one could be the credit note preparation being done by the system itself. So the system will collect the data from all the set of information available publicly and would create a CAM, basically, as we call it. Then the second thing could be a loan origination system, wherein the relationship manager would not need to even go to the customer's place, and everything could be filled by the vendor, or the dealer himself. And therefore, basis that minimal data up to a particular amount of limits can be set. This is whatever the dealer has been there. So commercial civil score, DST, bank analysis can be given by the dealer or the vendor itself, to a certain amount that could be done. Then early warning signals from his repayment conduct, and from his overall credit bureau reports again is taken up by the system itself. So some of the people here believe that the existing application would not be able to make that possible. So we may need to require a new application in which case. So new data and new application. So this is basically the cutting edge, whatever facility we would want to provide, and is nowhere there with the competition. As Asim has rightly mentioned, tier 2 financing on the both vendor side and the dealer side, whereas we are able to go up till tier 1, but the parent child or kind of a nodal status wherein the tier 1 vendor is able to introduce the tier 2 vendor in the system is something that we would need a new technology and new data. Then you integrate with the sales ledger data of the anchor, wherein you are able to take a lot of intelligent information from the anchor relationship with the dealer or the vendor for that case. Then we said each V1 status, you can get a lot of information about the conduct of the borrower. Then you are integrating with the MCA side. Again, as a result of which, whatever is there available with the MCA, you prepare your credit note in itself from that information. So you don't have to do anything on yourself. In fact, it should be such that the system should be able to look upon the MCA side and should be able to tell you that these are the available borrowers, whom would you like to start your relationship with. So this is something that and last but not least is integration when you're dealing with some new geography. So for example, UPI payment starts with Singapore, or the UPI payment starts with, say for example, Russia in times to come. Then it is akin to a domestic supply chain financing, wherein the new risks would emerge in terms of a currency risk, political risk. All those would also have to be factored within the system. So this is something that
fantastic. Now I have
there used to be a lot of RBI audit. So one of our head of operation used to tell us, I won't take the name of the bank or the person, when there is an RBI audit, give him more data. So if you ask for one data point, give him 25 data points. If you ask for one page of information, give him 100 page of information. Just let him get submerged in the information, and he won't ask you more questions. See, this is exactly what is happening in the current market. There is an information explosion. Now, whatever everybody has pointed out, the entire data points are available. Question is, how do we correlate the data points? How do we ensure that we get all these data points at one particular place? I'll tell you. Now, when we are actually onboarding any client, there are multiple data which is required. One is we get the data points from MCA side. We get the data points from GST. We get data point from CKYC. We get data points from banks. And there are some suppliers or some vendors which are actually converting the bank statement into the analysis, balance sheet into analysis through OCR technology. Question is, when we are actually looking at it, you have to ensure that bank statement correlates with the GST data, because it gets cross-checked. So when we talk about debit note, credit note, it gets transferred into some important analysis of the data. Problem is that when you are dealing with these guys, there is one particular vendor offering each service. Now that is a problem. If you really look at the blockchain technology also, there is one vendor which is expert in one particular technology. Problem is, if as a company, I need all these data point. Technically, somebody just mentioned that we can actually prepare the CAM, credit assessment note. But then how do we do it? So I mean, just to share the experience, now we are working on that kind of a software where I get entire data point. I am dealing with 4 different vendors to get all these data point, and I have operated 5th vendor to correlate out all that.
Okay.
Now that's the problem. That's the problem. Now I am doing it because I need it. I want to ensure that my entire transaction, from credit onboarding, credit analysis, client onboarding, disbursement, prepayment, has to be completely STP without any manual intervention. When we talk about supply chain, we talk about assignment, we talk about generating deed of assignment. Even we have automated that also. Now that deed of assignment need to be digitally signed, so we are getting it automated with that also. Question is, to what extent we can go? Will there be any service provider, I mean this is basically you, who can actually do it for me? Right now, if you really ask me, I am dealing with 5 or 6 different vendors for collating data, creating the CAM, and dealing with different vendors for different data points, and everybody passing on the buck to everybody else. It's a nightmare, and that's the problem with any NBFC or any other banks.
That's
So I think all the points which have been highlighted. I mean, these are the points which are coming out of the experience. Last 1.5 years, I am going through that particular. I will not use the word hell, but that particular issues continuously and trying to resolve these issues. But these are the practical problems, and I am sure IT companies will look at these in a positive fashion.
Fantastic.
Yeah, I'm really nothing more to add, but just to say thanks to the team to have put it together and make it succinctly available to us the way you did it. Many of these we have considered. I don't want to stand up in here and say that we've done all of them, but I guess a lot of the considerations, the design came from addressing these, but things like regulatory, interfacing with different systems, being able to pull data from multiple systems which are of different generations from a system standpoint. Those have all been addressed quite well in design, and our objective really is to, the roadmap of the product would really be to address any and every, all of these as we go along, so that it's all in the product, it's not quote unquote a change request. So that's the whole idea, so thank you very much for your inputs. And
Can I request a representative from the other 3 tables? One each.
Yeah.
Can we have one representative from each table? Please join us on the dais. Please introduce yourself, please introduce your topic of discussion, and please give a summary in 2 minutes.
Sure. Good evening, everyone. Myself, Ashish Sharma. I'm part of Access Bank. I'm glad to be here. It's a great session and I'm enjoying it thoroughly. So thanks for arranging it well, and the topic is absolutely interesting to have. So now, coming to the topic that we were wanting to discuss. It is talking about customization versus agility dilemma. And it's a peculiar dilemma that we all face into our day-to-day life at our work. So we started off with thinking that whether these two things are different. I mean to say customization and agility. And the starting point that I want to start is that we actually don't think these are two different aspects. So we don't want to have a kind of a conflicting comparison. We would rather want to have a complementing discussion, and we consider that customization is the first step towards agility. When we look towards agility, it's being close to the customer, fast to the customer, and that's where customization is the first step towards it. So that's the starting point that I would like to draw your attention to. And the way we have looked at it this discussion is that what are the things as a entity we look at when we come across this kind of discussion, which is agility versus customization. So the first thing is peculiar to our thing is new versus existing. So whenever a new requirement comes to us, whenever a new leg of requirement comes to us, the first question to ask is whether we use our existing systems or whether we go for a new system, and that's the first line of debate. And then the second question that arises, if we go to the new one, how do we transit from the existing one? If we remain with the existing ones, how do we meet the newer customer requirement that we have in place? So the question is new versus existing, and the second question that we as a consider is transitioning from the existing one to the new one. Third, important thing is buy versus subscribe. One of the key things that organizations today are looking in software as a service, pay as per use, is a concept that are coming in very, very fast in the software space. We were at a point where we wanted to decide whether we have a right deep pockets to buy a software, or we don't want to invest big, we want to go pay per use, or we want to go as per the business volumes. So that kind of concept. The fourth is the risk framework. So when I say the risk framework, it becomes extremely important for entities to decide what kind of risk are you exposing. So one of the interesting point that came from our team was when you are living in a faceless environment, the face that you are representing the customer becomes your face. So no matter how good your underwriting is, no matter how good your processes are, if your platform does not serve the purpose, or if the platform is not having a good customer experience, many things can go for a toss because you may not be able to deliver the value to the end customer no matter how your backend processes are. Probably few things that companies can look there is keeping the data security thing, where you can have an on-premise, off-premise kind of a model. One of the last thing that we looked at was vendor identification. So this is the biggest discussion that we are having in the corporate corridors. Which vendor to go for? Whether we go for a vendor who can deliver fast, whether we go for a partner. I would rather call partner rather than one vendor, because now it's more like a partnership. So whether we go for a partner who has faster GTM, or a partner who has been in the business for a while, though he is slow but he is reliable, he or she is reliable. One more thing is what is the damage control that the partner covers for. So tomorrow, if you want to scale up, let's say today we go small, tomorrow we want to go really big, does the partner have the capability of scaling up in a bigger way? Or in case there is any kind of a larger event or a miss event that happens, what kind of BCPs that the partner has? Because my business goes for a toss completely if I am living in a faceless environment and I operate in a branchless manner. That app, that website, and I would call it app because if you're not on mobile, probably you're not in business today. So if that app is my business. And if the app goes down, technically I am down. So I think these all areas we as a team felt are really important to look at when we consider whether we go for a new application or whether we go with the existing one or whether we go for agility or customization. So those were our views. I hope you found it valuable. Thank you very much.
Yes, absolutely. Deep dive and a lot of breadth of coverage. Thank you so much, team. Next.
Thank you. This is Pradeep from NAFA. I head the compliance and risk for NAFA.
Our topic for the discussion was partner selection dilemmas with respect to the same quadrants for the IT companies, fintechs, with respect to upgrade of existing application versus introduction of new application. So I will say the discussion started with a dilemma. Under what context we are discussing. So the thing was whether IT companies, while thinking about a IT partner or company thinking about a fintech partner. So we said when the rule of the game is not written, we will decide our own rules. And we started in the discussion in the dilemma, we ended in a dilemma. So whatever I have written in the left, we will be writing in the right corner. So let's arrive at those conclusions which we discussed. With respect to IT companies, for upgrade of existing applications, what we discussed is when IT companies asked for an upgrade, the IT companies partnering with another IT companies because they are thinking whether it is good for them to remain a product company or do the servicing themselves. What is a core for them as a company? So whether they get into the servicing also or they outsource that activity and remain as a product company. The second part on the introduction of new application, the dilemma which they have is whether they should source the business which is aligned to their skill set and their image, or they should align their image and the skill set as per the need of the business. So that is what they have the thought process in their mind. When we talk about fintechs with respect to upgrade of existing application, the first concern comes whether that upgrade will damage or disturb my existing business. How much hit that will make, because we know that any transition is not that smooth. It takes some time, there will be disturbances, whether it will affect my existing business, because upgrade may be required by one portion of the team which has a particular requirement. How much impact does it overall makes? Second is, how much loss of business will I make if I don't get that upgrade? So that I have to make a choice, whether it does not impact me that much and let's live without that upgrade, or I should go for an upgrade and have that disturbance which may give me some impact, but I will manage. With respect to introduction of new application, again fintech has to decide whether the market potential is there for that application or not. Should I go invest time, resources and develop this application, or I should align my the business around the existing skill set or the image. I should not spread too thin everywhere. I should focus with my image and my skill set and the business segment which I have chosen. So that's all what
Thank
we
you, thank you for this good insight. Please, one round of applause for this team. All of you have done wonderful analysis. All of you are analysts and researchers by that measure. Let's have the table number 5.
Yeah, I guess most of the points are already covered, so let's try to redo the things. Okay, so I represent the table 4. Our topic was cost speed dilemma. I'm Arkesh Shastri from State Bank of India. So yeah, 4 quadrant: cost, focus, speed focus, upgrading existing vis-a-vis introducing new applications. So when it comes to first quadrant, what we decided, why I want to upgrade existing application. So for that, what I need to do have? I need to have a dedicated budget allocation. My system should be scalable enough. If my system is not scalable enough, I can't go for the upgrading my existing application. We try to replicate the model over wherein tripartite is available. There is something called industry major, there is something called vendor finance, and there is something called dealer finance. Okay. We have to make sure if I want to go for existing application upgradation, if I want to make use of my existing infra, then definitely I'll go for the existing application cost per se also. If I want to do for some incremental addition in my product, I'll go for the upgradation existing application. If I want to introduce the enrich MIS, I will go for the existing application, considering the cost as a parameter. Wherein I'll go for the new application if there is something called regulatory requirement. I can't wait to upgrade my existing application. So there is anything regulatory requirement, I have to introduce something called new. If I have to adopt the new technologies, these are the days when I heard of AI, ML and blockchains of the world. If I have to adopt these latest technologies, I have to reinvent the new wheel. So that's why I will go for the second quadrant. Over here also, for achieving this, I need to have a dedicated budget allocation. If I want to get rid of legacy, I guess sometime back earlier speaker also said about the CPS or something. So if I want to get rid of legacy applications, there is no other option. I have to go for the new application. Last but not the least, I have to make sure that there should be a proper cost benefit analysis. So it should make sense to introduce something new. Otherwise, I'll make sure the provision has to be made in my existing application only. So this was cost per se. We'll go to the speed per se in the next next quadrant. So if there is something called integration challenge in my existing legacy infra, if I have a large corporate, there will be integration challenge. Then I can't reinvent the new wheel. At that time, considering the speed factor, I have to go with existing or upgrading my application. If I want to improve the performance, just a normal performance, if some of my system is lagging, I can very well do it my existing application only. If I want to quickly adapt to the technology, if I'm not doing, just for example, some of the application I have to just move to on-prem to cloud, say for example, I can do it in my existing application only. Last but not the least, if I have to cater the latest threat, security threat, I'll make sure I'll have the provision in my existing application. On the other way around, more or less same thing. If I don't want to be a lagger, if I want to be par with the business disruption, then I have to reinvent the wheel, speed per se. If I have to introduce the new channels, I guess earlier speaker already spoke about the maybe a payment channels. Currently we are happy with the RTFT and NEFT, RTGS and NEFT of double. If I want to go for UPI and IMPS or something like that, then again I have to make the provision in a speed manner. If I have to go with the plug and play kind of stuff, which my existing application may not support, over here again in a speedy manner, I'll go for the last quadrant. Last but not the least, if I have to adoption of the latest best industry practice, which may not be feasible in my existing application, I'll go for the last quadrant. To summarize, how to compromise between the cost and speed? First and foremost, I have to strike a right balance between the performance and security. So that also speed comes into picture. So I can compromise in terms of cost. If given a chance, what you will choose between cost and speed? That's our dilemma. So maybe cost per se, performance, incremental addition, and new technology. I can take little bit of compromise. If my budget is not up to the mark, I can, in these three parameters, I can wait and watch, and I may compromise on cost parameter. Whereas in terms of speed, where I'll go for the speed, no option. If there is a regulatory changes or if there is a regulatory requirement, in a speedy manner, I has to go. If there is security threat, something goes wrong, as my reputations may go for a loss, I have to approach that speedy manner. Last but not the least, if there is something called business disruption, I cannot wait, even if my cost is zero. So all these three parameters, my speed will come into picture. Thank you so much.
Thank you, Mr. Shastri. Fantastic analysis. Thank you, table number 4. I request gentlemen to step down.